Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Tuesday, March 24th, 2009. It's 11:30 a.m. Eastern Daylight Time in the U.S. Still Standard Time in Britain, it's 3:30 p.m. In Bermuda, it's 12:30 p.m. And in Mexico City, it's 9:30 in the morning. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. On this day in history, 20 years ago today, the Exxon Valdez, a VLCC, a very large crude carrier, ran aground in Prince William Sound in Alaska. Eventually, 11 million gallons of oil was to leak from its ruptured hull. That's litigation that's still floating around here and there today. Yesterday was a big day on the stock market. It was the release of the toxic asset plan. We'll talk a little bit about that. The market was up almost 500 points. It's down right now about 48 points on Capitol Hill as we speak. The Treasury Secretary, Mr. Geithner, as well as the Chairman of the Federal Reserve, Mr. Bernanke, are testifying in front of the House of Representatives Banking or Financial Services Committee. Also tonight at 9 p.m. Eastern Daylight Time, President Obama will be conducting a press conference, taking questions and answers in the East Room of the White House. It's expected that he's going to be focusing on his economic plan. There's a lot going on. Now to our main news. AIG, and the bonuses. Yes, there's more to come. This time some good news. Andrew Cuomo is emerging as the hero here. Mr. Cuomo has managed to induce 15 of the 20 leading bonus recipients to agree to give the money back. He announced this late yesterday afternoon in a conference call with reporters. He believes that he's going to be able to recoup $80 million of the $165 million in bonus payments that were made on March 15th. According to an AIG spokesperson late last night, a handful of senior executives have resigned from AIG's financial products unit. Presumably that means that there are going to be fewer strings attached to them for Mr. Cuomo to be able to lean on them. Mr. Cuomo has said that he wanted to make public the names and details of the bonus recipients, but he backed down from that as he was assessing security and privacy concerns. Mr. Cuomo then said, if a person returns the money, I don't think it's in the public interest to name them. He further added that anybody who returned the money will see their name disappear from his list permanently. As of this morning, according to the New York local television stations, which follow the New York Attorney General closely, one person was holding out from the U.S.-based group of 16 of the 20 who had received the biggest bonuses. The other 4 people who have not given the bonuses back are apparently outside of the AG's jurisdiction and are based in London. The Geithner plan was released yesterday, talking about toxic assets, and people are beginning to line up. Mutual fund managers, hedge funds, and private equity firms are all in the running to take part in the government's latest plan for cleaning up the balance sheets of the battered banks. The Treasury Department's vision for disposing banks' bad assets will see managers raise investor money and bid for the loans. Once a bid is accepted, the manager will buy the assets using its investors' money and a one-for-one match from the government, as well as government-backed leverage. Representatives of PIMCO, BlackRock, and Colony Capital all told MarketWatch last night that their companies intend to offer their services to work on the effort. Bill Gross, bond wizard guru, co-chief investment officer at PIMCO, said this is perhaps the first win-win-win policy to be put on the table, and it should be welcomed enthusiastically. He said PIMCO intends to participate and do our part to serve clients as well as to promote economic recovery. He said we think it's going to be a very successful program. Also, they believe that they're going to see attractive returns for investors because many of the assets are currently being valued at well below their intrinsic value. Shares of the investment firms, including several of those leading asset managers, surged after the Treasury Department detailed its plans. Goldman Sachs and Wellington Management are also working with the Federal Reserve to repurchase mortgage-backed securities, but officials at both firms declined to comment. Under the plan released yesterday, Funds will be able to leverage their capital, including the government's matching amount, up to 6-to-1, with the government guaranteeing the loans. The government will also backstop the loans, so the funds can only lose their initial capital investment. Among hedge funds, Oxzif Capital Management, Fortress Investment Group, Avenue Capital Group, Marathon Asset Management, and King Street Capital all have experienced in distressed debt. None of the firm's representatives returned calls seeking comment. This was the thinking as of yesterday afternoon. Now this morning, according to the U.S. business channels, the TV channels, the holdup might be, listen to this, that the banks may not be willing to sell the toxic assets at such cut rate prices. Can you believe it? We should have released this plan 4 or 5 months ago when they were desperate. Now they're all showing good balance sheets from the first quarter. On Capitol Hill, as I mentioned, Mr. Geithner is facing tough questions from lawmakers today. At the top of the regulatory agenda that he has is he wants to establish a clear government procedure for taking over and unwinding large struggling firms that are not banks and whose outright failure could threaten the whole economy. That, of course, is aimed at AIG. The lack of such a plan, the lack of such a process underscored the fallibility of such situations. AIG has now received 3 bailouts at a cost of up to $180 billion. According to the White House press secretary Robert Gibbs this morning, if the Treasury had resolution authority on AIG, you wouldn't have to put it into bankruptcy to change executive compensation. You could do that automatically. This isn't anything crazy. It's exactly what the Treasury Department needs. Geithner has a tough week. He has sessions today in front of the House, and on Thursday he's going to be appearing in front of the Senate. Washington